Michael Saylor is not your average corporate executive. While most CEOs cautiously manage balance sheets and diversified portfolios, Saylor made a decision that would, honestly, shock Wall Street and electrify the crypto world. He tied the fate of his billion-dollar company to Bitcoin. He didn't dabble, he didn't hedge, he bet the house. MicroStrategy went from a software company to a symbol of conviction, a corporate vessel sailing straight into the stormy seas of digital money. To his followers, he became a prophet, a leader who could see the future clearly. To his critics, he was a gambler, reckless and arrogant, daring the market to crush him. But whether hero or fool, Saylor forced the world to pay attention. He shifted Bitcoin from the fringes of internet culture into the heart of mainstream financial debate. For a brief moment in time, MicroStrategy stock became something extraordinary. Investors desperate for exposure to Bitcoin but unable to buy directly saw the company as a gateway. Its stock didn't just reflect its business, it reflected the hope of a new financial frontier. The market valued it above its Bitcoin holdings, creating what analysts called the Bitcoin premium. It was proof that narrative could inflate reality, that faith could bend numbers. But markets evolve. With the arrival of Bitcoin ETFs, the advantage that once made MicroStrategy unique began to erode. Suddenly, investors had easier and cheaper options, and the glow around Saylor's strategy began to dim. The lesson was harsh but simple. Premiums fade, hype decays, and what once seemed untouchable eventually collides with reality. Then came the quiet but telling adjustment. Michael Saylor, the man who preached "never sell," loosened restrictions on stock sales. To some, this was betrayal, a crack in the armor of his unwavering faith. To others, it was a sign of wisdom, a recognition that markets are unpredictable and survival requires flexibility. The contradiction was striking. How could a man who declared absolute conviction in Bitcoin prepare to liquidate? But perhaps that is the secret. Conviction and adaptability are not opposites, they are partners. Without the ability to adjust, conviction becomes a cage. With it, conviction becomes sustainable. Saylor's public image is one of certainty, a man whose confidence borders on religious fervor. He speaks about Bitcoin as though it were eternal truth. Yet his actions, subtle and often unspoken, reveal a recognition of fragility. Every move from leveraging billions in debt to adjusting MicroStrategy's stock sale limits carries with it an acknowledgement that markets are merciless. Faith alone cannot shield you from volatility. Even prophets build lifeboats. This paradox is not weakness but wisdom, a reminder that strength comes not from denial of risk, but from the preparation to endure it. Before Wall Street approved Bitcoin ETFs, MicroStrategy was the ETF in disguise. Buying shares of Saylor's company was honestly the closest investors could get to Bitcoin through traditional markets. It was a pretty brilliant arbitrage of perception, turning a software firm into a financial vessel for the digital gold rush. For a while, it worked spectacularly. The company's stock surged as investors treated it as a proxy for Bitcoin itself. But, monopolies never last. With multiple ETFs now competing for capital, MicroStrategy's unique edge has dulled. What once looked revolutionary now looks kind of replaceable. In the end, first-mover advantage is powerful but temporary. The question is not whether you can be first, but whether you can endure after everyone else arrives. What made Michael Saylor more than a CEO was not just his strategy but honestly his ability to inspire. His speeches carried the cadence of a preacher, his tweets spread like scripture, and his relentless energy created a following that bordered on worship. To many he was no longer just a businessman but a symbol of defiance against the old system. The cult of Saylor magnified his influence far beyond the walls of MicroStrategy. But worship is dangerous. Admiration turns into dependency, and dependency blinds judgment. When leaders are treated as prophets, their missteps become catastrophes for those who follow without question. The story of Saylor is also a warning. Inspiration should ignite independent thought, not smother it. Saylor's gamble was not just about buying Bitcoin, it was about borrowing billions to do it. Leverage was his sword, sharp and brilliant, but also deadly. In good times it amplified his victories. In bad times it threatened to turn small setbacks into devastating collapses. This was the double-edged nature of his empire, extraordinary courage wrapped in extraordinary risk. Debt magnifies destiny, but it also magnifies disaster. For Saylor, every fluctuation in Bitcoin's price carried not just market implications but existential ones. His balance sheet became a battlefield where every swing of the market was a clash between brilliance and ruin. Wall Street does not ignore men like Michael Saylor. Every purchase, every statement, every maneuver he makes is watched, analyzed, and dissected. His actions ripple through hedge funds, trading floors, and retail investors alike. When he buys, confidence rises. When he adjusts, whispers spread. In this way, Saylor has become both leader and signal, shaping markets in ways few individuals ever could. But being a signal is dangerous. Influence cuts both ways. A stumble from the leader can ignite panic in the followers, and in markets built on confidence, panic spreads faster than truth. Never sell. It is more than a mantra. It is a philosophy, a badge of honor in the world of Bitcoin believers. Michael Saylor embodies this creed, urging others to hold through every storm, no matter how violent. To hold is to resist fear, to declare loyalty to the future. But there is a razor-thin line between discipline and denial. Sometimes holding is courage, other times it is blindness. The psychology of holding is not about clinging forever, but about knowing why you hold. The true strength lies not in refusing to sell, but in refusing to let fear dictate the decision. Bitcoin is no longer the outlaw currency it once was. It has grown up. Governments debate it in parliaments, Wall Street offers ETFs, and institutions adopt it as part of their portfolios. The wild days of unregulated chaos are giving way to a new era of maturity. Volatility, while still fierce, has softened. Infrastructure has strengthened. What was once rebellion is becoming tradition. For Saylor, this transition is both vindication and challenge. Vindication, because Bitcoin has survived. Challenge, because it no longer stands apart from the mainstream. What happens to the prophet when the prophecy becomes ordinary? Visionaries rarely admit doubt, but markets have a way of exposing hesitation. Saylor's decision to ease stock sale limits was his blink, subtle but telling. To his followers it raised uncomfortable questions. Does the prophet doubt his own sermon? But to others it was evidence of wisdom, a recognition that survival requires adaptation. Visionaries are not infallible, they are human, and sometimes blinking is not weakness, it is foresight. The fading of MicroStrategy's premium is more than a financial event. It is, honestly, a parable about hype. At its peak, investors were willing to pay more than the value of the company's Bitcoin simply for the story. But stories fade, narratives weaken. Eventually markets return to fundamentals. What remains after the story collapses is reality, and reality does not care for hype. The fall of the premium is the fall of illusion, a reminder that perception may inflate value but only fundamentals sustain it. Michael Saylor plays on a stage of billions, but the lessons scale down to the smallest household. His story teaches the power of vision, the danger of leverage, and the necessity of flexibility. You do not need billions to understand these truths. Every family budget, every savings account, every investment portfolio faces the same forces of conviction and risk. Treat your household as Saylor treats his empire, with discipline, with courage, and with, an eye toward the long term. What comes next for Michael Saylor is uncertain. He may be remembered as the man who transformed Bitcoin into a corporate asset class, or as the gambler who tied too much to a single volatile dream. His legacy will be written not in his speeches but in the charts of the market. The empire he has built teeters on the edge of brilliance and catastrophe, and only time will tell which way it falls. But one truth is clear. His name will forever be tied to Bitcoin's history, for better or worse. At the end of the story, the focus shifts away from Saylor and back to you. His playbook is his, built on his convictions, his risks, and his strategies. But your playbook must be your own. His rules are not laws, his victories are not guarantees. The true lesson of Saylor is not to follow in his footsteps but to write your own path with the same courage and clarity. Every investor, every builder, every dreamer must design their own principles and live by them. Because in the end, markets will rise and fall, leaders will be celebrated and forgotten, but your playbook, the one you write and follow, will determine whether you endure or collapse.